Hey everybody, Boris. Welcome to the crosses section for Aug 15 to Aug 19, 2016. Kind of an interesting week this week in terms of crosses, and in many ways I think there could be some more opportunities in the crosses than even in the majors. Because remember, the sort of central theme that we've been trying to talk about this whole week is that majors are stuck in ranges, calm dollars are stuck in ranges. The relative break amongst those ranges is where the trades could be in the crosses. And to that end, the cross ideas that I have this week are kind of interesting. The first idea is really a trade on the Australian employment data, right? The Euro odd is either going to take out the 47s to the upside if we have a very negative Australian employment data, or we could break the 144s to the downside on support. It's a relatively decent range. It's really worth watching, and I think the sort of Australian employment data trade in front or behind, depending on how you want to trade it, is probably going to be best expressed through that cross where you're going to get the best potential movement. Because I don't think Euro is going to do anything, and it's really going to be this movement in the Aussie that could really move us one way or the other on the cross into a significant manner. The next idea is really a question of have we peaked in Euro pound, and that's a very, very interesting question. I mean, Euro pound has just been a one-way move to the upside. That's all a function of pound weakness, right? So do we get further pound weakness this week with let's say a negative read on the labor data and a negative read on the retail sales? That definitely takes us to 87 fresh highs, I think, for the year. Really, worth watching. But we are getting to that point where if we sort of anticipate bad data and it doesn't quite come, I think the reversal could be quite big. I think cable could come back on a short covering rally significantly, and I like the idea of trying to short. If you need a fundamental catalyst to short against this, but I like the idea of shorting Euro pound at the highs if you get the fundamental catalyst to kind of move cable down your way. Remember, if the data still sucks, you're really speculating on shorting against the highs. It could extend substantially. It's just simply that it's just been a very, very long extension in the move, and I think it's long on a tooth. So any kind of a fundamental catalyst that moves it the other way could be enough to take us 100 points to the downside on the Euro pound. It's going to be a very, regardless of how you look at it, going to be, I think, a very interesting trade and a very interesting pair to trade this whole week. And the other idea is, again, similar kind of idea, different cross expression of pound strength to weakness, but certainly very visible. This has sort of a double component. Now, remember, we talked about the idea that yen is inching within this 100, 100 level. If we get risk aversion on the yen, meaning that the yen kind of breaks the 101s and they start to just swamp it and try to drive it back below the 100. And of course, very little movement on the pound as everybody still hates the pound. Pound yen just looks to be like it's ready to take out the 130s and way deep into the maybe 127s before the dust settles. So both of those could really accelerate depending on how the themes play out into the week. Let's just take a look at the charts here and see where everything stands. So first, let's just take a look at as I said, Euro Aussie is a single event kind of a trade, just worth watching. So Euro Aussie already showing relative strength. This is Aussie showing relative weakness. This is my whole argument that the commodity dollars have kind of peaked. I like the idea here of getting long this thing. If you get weak Australian data, it's quite possible we get a big extension move to 47s, possibly even 48s. On the Euro Aussie, because Euro will stay stationary and Aussie is going to crumble down to the 75s. So it's an interesting trade here. You are a little bit extended over here. You are reaching out. I mean, ideally, you'd love to be able to buy at 44s, but maybe if you get a little bit of a retrace down into 45s, the bet here is you need to see weaker Australian data. If you're correct on that, you really could get extension here nicely into the week on just the data alone. Now, the Euro pound trade, as I was simply saying, is really just simply a matter of picking tops. Something not advisable, not a great idea. But on the other hand, you're looking here at multi. As a matter of fact, let's just see how far is this. Let's go on the weeklies, maybe even 3 years. I think this kind of, yeah, this is a 3-year weekly high. So we haven't hit 87s. So it's 213, right? Is that the we were actually above the 213 highs here at this point. So this is a multi-year high, big break. I mean, that's bullish. I agree. I definitely don't dismiss this as being bullish, but it's also kind of, as I said, long in a tooth. And if you can get positive UK data, which is a big stretch, but if we do get a positive UK data, I think there's a potential here to kind of set a double top here, correction back down, certainly towards the 86s, possibly even 85, 50s, 85s, on just simply pound correction. This is a, you really put your head in front of a locomotive kind of trade. You gotta really gamble on the idea that this turns. Otherwise, the course of least extension is sort of the 87s, which I think does make sense. At 87, it certainly could extend that way on further pound weakness if we get down to the 28s and possibly 27.50s in the post-Brexit lows. And then after that, it probably exhausts itself right there. Either way, I think it's going to be a very volatile trade. I love this cross because I think there's going to be a lot of action in this cross. And you want to watch the 87s, you want to watch the 86, 85s on the downside. 85 certainly is going to be a big, decent support area, to buy on, because a lot of the stuff that's going to be happening here is pure profit taking, one way or the other. But initially, the weak UK data could extend us down up to 87. At which point, I think just taking a punt on even a small correction could be worth your time. And then last but not least, on the negative side, I mean, you sort of, if you kind of want to divide your speculative ideas, you get short euro pound, you get short pound yen. This way, you're kind of on both sides of the pound, and one of those trades should work well for you. This trade here is the 130 break. The 130 break really can open up a much more significant sell-off all the way down to 28s, and that's a bet on the fact that the yen breaks the 101s and the hundreds in a very, very quick risk aversion move. And of course, cable kind of follows simply because everybody hates cable and we get weak UK data. So if you get this combination of both selling in the yen and weak UK data, you really can get pounded in the pound yen all the way down, possibly to 127s before the dust settles. Those are the cross ideas. Cross ideas in many ways are going to be the much more interesting and much more volatile trades this week, as we still remain in the ranges for everything else. And I wish you guys the best of luck and the best of trading. Boris, over and out.